Hey everybody, Signet here with the Bullish Bears. So this is video 3 on the spot risk strategy, and what I wanted to do today in this video is take everything that we have covered in the last two videos and actually put it all together and demonstrate how we would actually trade with this strategy. Now, I didn't get the video started before I jumped into a trade. We had this explosive candle moving to the upside, and I wanted to make sure I got into the trade. So I got in at 32. I went long with 3, and I offered out at 36. That would be 4 points from where I got in. Now, normally we would get in at spot and get out at risk, but this is that area that is unique. 25 and 42 up here. Since I'm not on the indicator right now, I'm using the drawings that came with the charts that we have shared as a part of this series. In the indicator, 42 would be red and 25 would be green. So the noise you just heard is I had offered out at 36, which means I got risk out of the trade. Now I'm still long one, and I want to protect my runner. Since I got in, you can see at 32, I want to send some protection at 32 and a half. And the reason for that is for every 25 cents that the NQ moves, that is $5. And so if I offer to protect my runner at 32 half, then it's $10 that I would make if I get risk out stop out. And the problem with risk out stop out is that you could get a lot of paper cuts that way, right? Because you can, if you get in with 2 and you get risk out and then price comes back down and stops you out, if you offered out where you got in, you still have to pay commissions, right? So this way, if my runner comes back down and I get stopped out, I'm at least making 50 cents, which is $10, and that would pay the commissions for the trade. Now, I did notice that the quantity was off, so I got to fix that. We got 32 here, so we want to offer 32 half. One of the things I found out while trying to paper trade this strategy was that if you mess with the quantities, you have to make sure to remember which quantity you're using. And for a long time, I left this just at 1, and I would just, click how many times I want. But in an active day, this dome can be running up and down really fast, and it can be hard to click into the area that you're wanting, 2 or 3 times. And so I've gotten a lot better at that. Practice, practice, practice. And, so if I'm getting ready to enter the trade, I like to use 3 contracts. I come up and I put 3 in. I click where I want, and then I go up and I change it. And so make sure you practice that. Okay, so I was talking about this area here and its uniqueness with the trading strategy. 42 is a very unique area. It's a part of the strategy that has this channel between 42 and 25. Now, as you can see, there is no 25 line in the drawings, but on the indicator there is. And like I said, I'm not using the indicator right now. So we'll just go ahead and make our lines. We've got the 25 now in green, just like on the indicator. And we've got 42 in red, just like on the indicator. Now that noise that you heard was me getting stopped out. So I got in at 32, offered long, got stopped out when price came back down and hit me. Now it's okay because I didn't lose any money in that trade. I actually made maybe $2 or $3. That's fine. The idea was that I didn't want to lose money from my from my runner. So right now we do have this little flag pattern, right? We want to recognize where price came from and where it's going. Price is getting hung up here at the 33, which on the indicator you would not see a 32. You would only see this 33. That's something that we have to recognize is unique about using the lines instead of using the indicator. This 36 is not on the indicator. We're going to leave it on the drawing. We're just going to shade it in so it's not so in my face, not so obvious. All right, I do like the drawing in this area better than the indicator. On the indicator, it goes from 25 to 33, and what we would do is offer in at the 33 and then go long to the 42 or short to the 25. We're going to offer long here. Let's go ahead and take a pretty good look at what we got going on. Yeah, we're going to go long at the 33. So we'll change the quantity up to 3, go to 33 and offer, and then we'll bump that down to 2. So I did get filled at the 33. I'm looking to go long from here. And we want to offer out at 37. That would be, an acceptable would be 4 points up. So 37 would be 4 points from 33. We would want to offer 2 there. Now we are taking heat in this trade. I got in at the 33. Price right now is at 32, so I am taking heat. But I don't like using a hard stop in this trade. And the reason why is all of these lines form a support or resistance in the trades. And so what happens is if you're taking heat, a lot of times price will bounce off of that line. And even if the market does continue to go against you, oftentimes that bounce can let you out without taking the full 4-point loss in the trade. 4 points is what we would want to watch. If I got in at 33, then 29 would be my 4 points of loss. And you can see that we have not come down 4 points. This is still a good trade. We're taking a little bit of heat, but if I was to just put in a hard stop at 29 and price came down against me a little bit before moving up, I wouldn't have the opportunity to see the trade through. I would just stops work, right? And I would just be kicked out of my trade. I'd rather have the opportunity on my own to manage the trade, and so I don't like to offer a hard stop to manage a trade that's going against me. Now, once I get risk out, then I will offer a hard stop to protect my runner, like I did just a few minutes ago by offering the 32 half when we made a little bit of money in this part of the trade here. So I am still long 3. I got in at the 33. We are taking heat in the trade. This is going against me. This strategy does not offer direction. And I have heard from quite a few people now that are having difficulty trading this strategy because they thought that they were going to have some kind of indication of market direction in this trade and in this strategy. But unfortunately, that's not what this is designed to do. The whole concept behind this trade strategy is that you're getting into a trade that has defined risk and set areas to take profits. Those two situations are really the biggest roadblocks to most new traders' success. They fail to adequately and consistently take profits and protect themselves from losers. And so what this strategy does is offer you an opportunity to recognize where to get risk out of the trade, and a system that is designed to let your runners run so that you can not only lock in profits to continue to grow your account, but also take those opportunities when price continues to move in your direction to uh, enjoy those profits. So many people that have come into the trade room at the Bullish Bears say that they get out of a trade and it continues to go in their direction, right? That they got out too soon, they left money on the table, or whatever phrase you would like to use. And this system is really designed to let your runner run while still making sure you lock in some profits. And that's kind of the main focus in this trade. So we are taking heat now, to the point where we're going to look to start managing this trade as a loser if price does not begin to turn around. Now I am watching another chart, which I will bring up here in a moment. I just want to watch to make sure that this isn't working out too badly against me. This is the chart that I'm watching on another screen. It's the 4 major indexes. This is 1 minute chart here. This should be set at a 1 minute chart as well. So we got the NQ on the 1 minute with a Bollinger Band, and then the ES and the Russell, the Dow, and the bonds. And then during the day, of course, I would have cumulative tick there. We are after hours, so no cumulative tick. I like watching the Bollinger Band on the 1 minute, and what I have on my own here is the Keltner channel, and we are on the 2 minute, and I've got an RSI 10. I'm comfortable using an RSI 10, but I also like the RSI 8. The 14 is a little too broad for a 2 minute chart, so I don't find much value in an RSI at 14 set on 2 minutes. I do have fractal energy. During market hours, I would not have all of this other stuff. I would just use market breadth like tick and AD, but after hours, right, we don't have that, and um, the Keltner channels really help me out with identifying range-bound market bottoms and tops. Of course, trending markets, it doesn't do any good. Obviously, you can see when we were trending through here, it was way outside of the bands. But I'm just trying to find a way to have some recording time to be able to show where to get in, to get out of trades, how to manage a trade that's turned against you, how to let your profits run, managing your risk out. The whole idea in this trade is to get risk out of the trade. It's the number one goal that you get in, get risk out. And then when you've hit day done, that you stop for the day and you do not continue to trade. That's a big deal. If you the more you trade, the more you are at risk. And one of the things that I learned in the oil field when I was working and we would deal with safety issues, mainly when people would have to go climbing. Falls are a big deal in the oil field, and the best way to avoid a fall is to get the job brought down to the ground so that you don't have to worry about somebody falling. And the easiest way to protect yourself from a loss in trades is to not trade, right? So once you hit day done, you need to stop. Paper trade, or maybe go do options or shares or something else. The more you trade, every time you trade, you are inviting risk. And so find what is appropriate for you to be your day done, and that's where you want to stop trading. So we are down 4 points. I would now be looking to exit this trade. Um, the strategy is designed with a risk 4 to make 10 situation. And so now that we are down 4, if this does not begin to move in my direction within this candle, I'm going to flatten the trade and just look to try again. The reason I have not yet just abandoned the trade already is because if you look here at the NQ, we are in a flat channel. Price came down to its previous low, and I'm looking for a recovery off the bottom. If I get that, then I could perhaps leave the trade even as a loser higher than the 29. I'd rather not take 4 points of loss if I don't have to. So that's kind of my reasoning for staying in a trade that's taking the kind of heat that I'm going through at the moment. We do have quite a bit of energy building up. This could end up being a trade that goes in my favor, and we are no longer sitting at 29. So I'm looking to, even if I have to abandon this trade, I'd like to abandon it a little higher off the 29 if I have to. Now, there's times that trying this is going to go against you. Right now, this would be getting stopped out, right? It goes against us. We manage to trade as a loser. If I get this sudden spike to the downside, which would absolutely be going against me, that's what we would call a disaster stop. Getting in at 32 and getting out somewhere around the 26, that's a 6-point turn against me, and that's a disaster. All right, so disaster trades, disaster stops are real. You will end up in losing trades. We just want to recognize the fact that that does happen, and then it's gonna happen at some point. It's something you're gonna have to come to terms with. So in this trade, I did get in at the 33, and so 29 is where 4 points is at. I'm still taking heat in this trade, but I'm still looking for it to come back up. We are after hours. Volume's a bit light in the after hours, but still looking to sit tight here a little bit and find some profits. Want to take this opportunity, to show how this trading strategy works. The videos that came before this one walked through a lot of the rules, but people have really been asking to see this trade in action. And well, during the normal market time, I'm typically streaming in the room, or I'm doing my work or school work, and I don't have the opportunity to record. So I'm doing it now. It's a bit later in the evening, and so we got this lower volume. Okay, so I took a loss here. I got in at 33 and I got out at 29. This could continue to move in my favor, but I don't have any guarantees. The rules say that if it came down and violated 29, 4 points from where I got in, then I need to look for an exit. All right, and I didn't have to just hit flatten as soon as it got to 29. I could begin to find an exit, but I did need to leave the trade. Now, inevitably you're going to get into those situations like right now where price is going in the direction I wanted it to go, but you can't take that. All right, so we got price coming back up again. Now, like I said, I am using the drawings instead of the indicator, which means the 32 would be where the indicator would have a line, 32 or 33. In this situation, we really could just go with either one, and you can see I did get out of a trade that ended up moving in the direction that I wanted it to go. I was in at 33, and price had come down to 29 and threatened my position. We can't take that risk that price is actually going to recover. The rules say that if it comes down and breaks your position and closes below it, then you need to look to exit the trade. And I should have taken the opportunity during this candle to go ahead and exit the trade. I didn't, hoping that price was going to work its way back up and then we had this candle, and so I went ahead and exited the trade, and you can see I am down $10 today. Price is now moving in the direction I wanted it to go. We can offer in at the 33 and look to go long again. I've often said in the room that waiting for a candle close can save you from a troubling situation. So while I have this offer on the table, I'll go ahead and talk about what happened right here. If we were seeing price move up here and this candle had not yet closed but had broke through this 36, perhaps someone would be thinking, oh, I'm going to go long to the upside here and get in the trade without waiting for candle close. And at that point, if they had gotten in here, you can see that it wouldn't have worked out good for them. But if they had waited for candle close, they would have realized that price had not yet made it through there, and in fact actually might be going in the other direction. So if you were wanting to go long from here, you would definitely want to wait for candle close. Now if you wanted to go short from here, say we were to offer in at the 36 to go short, then of course there's no reason to wait for candle close to go short from here, because that's the direction we would want the price to go anyways. All right, but waiting for candle close, if you're looking to go long, is absolutely a good idea, because as you can see, like I was saying, if I offered here at spot to go long without waiting for that candle to close, I would have been wrong. And yet if I had just sat and waited for that candle to close, then I would have been able to recognize, oh, you know what, maybe this isn't going to go long, maybe I want to go short instead. Now I did get in here. I offered 3 to go short from the 36. 32 is where I want to offer out 2. So I'll go down to 33 and buy back. Buy back at 32, not 33. So I'm offering out at 32. That's a 4-point move. We're risking 4 to make 10. And we want to offer all of our position except 1. Since I'm short 3, I'm offering 2. And that's a 4-point move from 36 to 32. As you can see, I did not put a stop on. I don't want to use a stop, as I've discussed earlier. What I'm looking for right now is to get risk out of this trade. Now once I do that, I will put in a stop up here. I got in at 36, so I will put a stop in at 35.5. That 50 cents is $10, and that will cover the cost of my commission if I happen to get risk out, stop out. Now what I would like is for a runner. So if I can get down here and get risk out, then I can hopefully get a runner perhaps down to the 26 and make a little bit of profit in this video, so that I'm not just showing losing trades through this whole thing. So this is on paper, obviously, but I want it to really demonstrate how the trade works. I'm not trying to prove that I can make money in this trade. I'm just trying to demonstrate how the trade works. Of course, if I can record making some money while I'm doing it, then I'm okay with that. But this demonstration is not to prove that I can trade this strategy successfully, because obviously paper, it's not the same as trading live, trading real money. We just want to demonstrate how this trade strategy works, why I offer in the way that I do, why I take profits or flatten out when trades go against me. And so right now we're just waiting to get some price discovery here. Waiting to see if we're going to get a new high, which it seems like we're headed in that direction. Now, in the previous videos, I talked about looking at where we came from and where we're going. So right now, for an example, we've got a discharge of fractal energy, and we're really high in the RSI. Now, this is a normal RSI. This is not the RSI Laguerre or anything like that. It just might look a little different than your RSI because I use the 50 line, and I want to see a color change in the RSI when it's above or below 0, because to me the RSI is a lot like a basketball field or a football field. The 50 line is the middle, and the indicator roams up or down from there, but always comes back to the middle. I don't look at it as a 0 to 100 indicator. And so I added the line at the 50, and then I changed the color code. Anything above 50 is bullish, anything below 50 is bearish. Makes it very easy to quickly see where we're at. And I went short here, even though we had a quote overbought situation. I was looking to take this short, find some profits, and hopefully roll with the energy in the market and take this lower. Price is still struggling. It has found this level of price for quite a few hours now, and we're range bound. But I was talking about looking at where we came from and where we're going. Price goes from the roundy, from the 73.00 is a roundy. We go from the roundy to the 12, from the 12 to the 33, from the 33 to the 50, from the 50 to the 62, 62 to 88, and from 88 back to a roundy. In the bigger scheme of things, 50 and roundies are very strong support and resistance, and we also need to keep that in mind when we're trading, to recognize where price is likely to go and what it is likely to do. So we keep coming up to this 36, and that is our very strong resistance at this point. We've tested it 3 times now, and we do want to be very careful. Persistence beats resistance, and so the more we test this area, the more likely it is that we're going to end up breaking through it. And at this point, we definitely have enough energy to break through this area. So we do need to be cautious. I am getting to the point where I'm looking to get out of this trade. So I might look to just get price down here a little ways and get out of this trade before it goes against me. I would be happy to lock in some profits that at least pay the commissions on this trade and make sure that I get out before this situation gets ugly. So there it is, getting ugly, about to set a high past this range that we've been stuck in, and there's the fractal energy coming off that would give it the boost it needs to break through this area of resistance. We've got a high RSI energy coming out. Not a very good situation for where I'm sitting, since I'm short. So I got out, again took a loss. We can offer at the 36 to go long. Maybe price will come down and let us in. So this sucks. Obviously, don't like taking the losses. But with the RSI overbought, the fractal energy releasing, and we breaking through this area here that has been our overhead resistance. I wanted to make sure that I was not about to take a long ride in the wrong direction, and so I bailed out of that trade. I don't like that. It's definitely not what I wanted to be recording tonight, but the first thing that I focus on is protecting my profits and getting out of a bad trade. Everything that I was looking at was lining up to tell me that this was not going to end well and that I need to get out of the trade, and so I did. I would rather eat the commissions and just be wrong than to see a massive spike go against. So still sitting in this trade, I do have 2 offered at 40. I realize that it's not the 42 where this risk line is at, but we risk 4 to make 10. I got in at 36, and I want to get out with the 4. Now I took 3 long, so I'm offering 2. Alright, so unfortunately I didn't get that on video, but I got in at the 36, offered out at the 40, got filled in that, had my runner continue on, started to get a reversal and flattened my position. So I did end up with profit, and we are headed back to the downside. I tried to offer here at the 42, didn't get filled. The fractal energy did release, getting us up into that area to set that new high. But now, since I didn't get filled at the 42, I am not in a position, and I'm now looking to get into the trade. We could offer in at the 36 to go short. On the indicator, you can see we are coming down to the center of the Keltner channel. And on the 1-minute chart, you can see that we're coming down to the center of the Bollinger Band. We barely broke out of the Bollinger here at that last green candle, but that is on a 1-minute, and this is on the 2-minute. So we are short here at the 36. We're trying to get out at 32. That would be 4 points. So we've got 2 in our quantity. We'll offer out at 32. We can put that on and look for price to come down. Alright, so here we are again taking heat in the trade. I got in short at the 36, and you can see that price again tried to take a bounce off of that area to go back up to the upside. So I started the recording back up to demonstrate that if I continue to take heat against my position, because I am short 3, that I'm going to look to manage to get out of this trade, hopefully somewhere a little closer than 38, right? Because from 36 we could take heat into the 40s, and that is acceptable, but I'm not looking to take that kind of loss. We do want to give price some room to move. Don't want to be so hair trigger on here that we get out of trades that could turn out to be profitable, but we do want to manage our loss and manage our risk. So 4 points is what we risk. We risk 4 to make 10. If price comes above 40, I'm going to begin looking for an exit. Now, spot and risk are areas of support and resistance. It's where price can get hung up. And so if price does go to 40, I don't want to just set a hard stop, and instead I want to manage this personally. If price goes to 40, I would expect to see some kind of bounce, and on the bounce it might let me out somewhere around 39 or 38 so that I'm not taking the full 4 points of loss there. So this is going against me. From the 33, we do seek the 42, and so that's the situation that we're in here at the moment. This is getting close to where I would need to manage the trade, but it's not there yet. Still need to let price discovery do its thing. I am watching all four of the indexes and the bonds, and I'm looking to still go short in this. It is going against me still, although it's coming back inside the bands now. On the 1 minute, price is above the band, the center band of the Bollinger, but it is not outside the bands. So you can see this is the NQ on the 1 minute with a Bollinger band, and that's what I'm watching on another chart with the four indexes and the bonds. But right now, our trade is still a viable trade. We are taking heat, but it has not hit our trigger to exit the trade as a loser. So we want to just give price some time for discovery. I did notice as I was talking that the bonds dropped a point, almost 2 points. So when the bonds slack off, a lot of times we see a rise in the indexes. They are inverse, and that is not good for where I'm sitting since I'm short 3. So it's getting to that point. I did offer out, and I'm going to take this long from the 36. So you can see I've offered to go long here. If price will come down and let me in, on the 1 minute, we're seeing a bounce off the middle of the Bollinger Band. It does not look like it's going to let me in. So even with that losing trade, oh, it did let me in. So I am in. All right, I must have hit reverse instead of flatten. And so you can see that the average price of me getting in was $37.25. We need to offer 2. To get risk out of the trade. So we got out. That should have been at 40. That was a little sloppy, but from the 33 we do seek the 42, or from the 36. Right? It's this area here that is completely different than all the other areas in this strategy. The way that price moves from 25 to 42, we use 33 as the center for our risk to get out of the trade from the 25 or from the 42, and we can go long from there if we have days like this where we're ranging. And if we do go long at the 33, then we can get out, at the 37, or we can get out at the 29. It's still giving us that 4 points. The whole idea in all of this is that we want to get risk out of the trade. Right, so I am still long 1, and I want to protect my runner. If I got in at 37.25, then I can offer 37.75 as a way to protect myself. If price comes down and I get risk out, stop out, I will have paid for my contract that got stopped out in this way. So we did finally make it to the 42. Finally, we're out of this situation that we've been in. From the 25, we do seek the 42. If you were comfortable with the risk from that kind of heat coming back against you, had you got in at the 25, you could have gotten risk out at the 33 and have just ranged through all of this, and you would still be in the trade with your runner here. Now, when I started the recording, we were around this area, so we had already lost our opportunity to come from the 25. One thing to think about when you're looking to trade this strategy is you don't have to get in here at the 33. You could be patient, wait for price discovery, see if price comes back down to the 25 to go long or short, or you could wait for all of this to have played out and then have gone long or short from the 42. Right? So you don't have to get in just because price is moving through the center of this channel and hitting any of these risk or spot lines. Something that I just wanted to make sure that you are well aware of. You don't have to take the trade, and you can wait for price discovery. You can wait for price to get up into an appropriate spot. We do know that we go from the 25 to the 33 and from the 33 to the 42. So if you had done what I did and started trading when price was already here, you could have done what I did not do and just have waited for price to come up to this point. So we did now make it to the 42, and I am still long 1. So that's my runner continuing to run. I'm not interested in taking profits here, but if I wanted to protect the win that I had already gained, I could just flatten at this time and keep these profits. I don't have to let price come down and stop me out. Right? We could just take our profits like that. All right, so now I am flat. I am good on the day. We're at the 42. From the 42, we seek, this is an odd area, but we can seek the 46. We could go back to the 36. It really just depends on what the market is doing. I'd like to go long from the 42. Let's wait for that candle to close and see what we get. If we get a close above 42, we'll go long from the 42, and if not, we'll look to go short from here. But the way price is moving and the fractal energy and what I'm seeing on the charts, it looks like we're going to be going long. So I'm going to wait for this candle to close, and we'll offer in at the 42. Now, I was asked today in the chat room, what happens if price breaks through here and you're waiting for a candle close and then it closes up here and continues to run? What happens? Well, what happens is you miss your trade. Now, you can jump onto it, right? If we're waiting for a candle and it closes here and the next one opens and it continues to run without coming back down to the 42, you could offer and jump in. Absolutely, you could do that. But you want to recognize what you're doing. You're chasing that trade. You're not getting in where the appropriate entry would be. The NQ does move in these 10 block ranges. These lines were established because of previous price moves in the way that has been recognized as beneficial. And so getting in at the 42 is more appropriate than trying to chase it and jump in if price was leaving you behind. That doesn't mean that you can't do it. It just means that if you want to change this strategy or adapt it in some way to make it something to fit how you would like to trade, you just have to recognize that you're no longer trading the strategy as it was developed. You're now trading your own strategy. Now, we have talked about building our own strategies. We've talked about how if you want to build your own strategy, that you need to develop all the rules, write them down, put them in cement so that they are something real and legitimate that you can look at and point to and say, this is what I'm going to do and this is why I'm going to do it. And that really is important. One of the areas that I have noticed with a lot of traders is that they don't have very very concrete rules. And then they don't have any structure and they don't have anything to follow. And then their emotions get the best of them and they start jumping into and out of trades based on fear, greed, um, all these emotions welling up in them and upsetting them. So we did get long. I'm going to offer to take profits at the 46, and I should have had that set already to do that. I might have missed my opportunity right there to have gotten profits. So hopefully that's not going to come down, and hopefully we don't miss our chance that was just offered up there. Should have already had that done. Once I had gotten filled, that should have been the very first thing I did, was to offer out. All right, so that's definitely want to make sure that you do that once you're in the trade. Offer the two, or offer, however many contracts you go long or you go short, offer all but the runner as soon as you get into the trade, so that something like this doesn't happen. Right? I could be risk out right now, and instead now I'm waiting for this candle to just bounce all over the price. I'm waiting for price discovery. That really is unfortunate, but it's my own mistake. Should have already had that done. Hopefully this turns out in my favor. So still sitting in that same situation. I paused the video there for a little bit. Still looking to get price up and let us out at risk. Now, right now, I'm actually looking to get out at spot instead of risk. So there we go. Got risk out of the trade. Now I want to protect my runner. I got filled in the beginning at 42. So I want to go down to 42 half and offer out my runner so that if I get risk out, stop out, it pays for that contract. That might not seem very important, but we want to avoid those paper cuts. All right, this is a strategy where we trade at least 2 contracts. And if you are on the micro and you're trading 2 contracts and you get risk out, stop out, well, if you are trading on a small account, that stop out can really just cut and cut and cut those profits. On the mini, a $1 move is $20, but on the micro, a $1 move, it's only $2. So it's very important that we get our contracts covered, because a round trip in a micro is going to cost you, depending on your broker, anywhere from $1.50 to $2 round trip, and that's a dollar move in the micro. So it's very important to make sure that we can protect ourselves from those paper cuts. So I am still long 1. I could just offer out at the 46, lock in my profits, not take a runner. I'm not interested in doing that. I like having the runner on. There has been a lot of times where my runner has really been in some great moves. And so I don't want to cap my possibilities. Alright, so you can see that I'm taking heat against my runner. I'm still profitable. I could just get out now, but I'm going to let price discover. And if I get stopped out, well, it'll pay for my contract at least. So I'm really just going to let price do its thing. The RSI is still above 50. The fractal energy, well, it's getting a bit choppy, so it's not offering us a lot of information one way or the other. But we want to look at where we've been and where we're going, right? Where we came from, where we're going. we should be going up to the 50. When price comes from below, we expect it to come eventually to the 50. We did get rejected here at the 46. So from the 36 or from the 33, we went to the 42. We got rejected here. We could just be going through some consolidation before moving higher. I'm not interested in stopping my runner. I think I have more value in letting it die if that's what happens, rather than just booting myself out of the trade. So on the indexes right now, while we're waiting to see what will happen with that runner, you can see that this is what I've been watching. And the bonds sold off, which helped us through this whole move here. But you can see when the bonds turned green, they were starting to rally. And that's when we started taking heat in our trade. Now this is the 1 minute NASDAQ. All of these indexes are on the 1 minute. I keep the Bollinger. I was trading the ES earlier, so I've got a Bollinger on the ES. But oftentimes we'll see a bounce on the midline of the Bollinger. If we're in a strong market that's setting higher highs and higher lows, we can see opportunities in those slight pullbacks. I'm going to offer long on the 42 again. Hopefully I didn't miss my opportunity while I was showing those other charts. We'll offer long at the 42, and we'll look to get risk out again at the 46. And really, if you're trading the mini, you could do this all day long, just racking up profits. Now I do it with 3. You could do it with 2, but offering 3 and getting 4 points and then protecting your runner, you could do that all day long, just racking up profits. You don't need big, massive moves in the market. We're just going from line to line and from line to line again and again and again. So I got in, I got filled at the 42. We want to offer out at the 46. This time we're not going to wait and make that mistake again. So we put our 2 up here. We went long at the 42. We're getting out at the 46 with most of our trade, but we want to leave a runner on. On the 1 minute charts, the ES and the NQ took a bounce off the middle Bollinger. Of course, right now, as I'm talking, the NQ broke through the center of the Bollinger and is falling below it. And here on the 2 minute, we've broke through the bottom of the 42, and we're headed towards the center of the Keltner. From the 42, we would be seeking the 33. So if I had gone short here, we would look to take profits at the 33. Unfortunately, I went long here. And so now I need to manage this trade. Hopefully it'll let me out without taking too much loss. If I got in at 42, then 38 would be 4 points. So as long as price stays above 38, I will look to still take this trade long. Alright, so we got a bounce off the Keltner middle. On the 1 minute, what I've been watching on the other charts is that we took a bounce off the bottom of the Bollinger on the ES and the NQ. We did get a spike in the bonds, but it looks like it's trying to fade back out. That fade can give us a move to the upside from this low here at 2900. We've set higher high, and a higher high. Now we had a higher low, and a higher low, and a higher low. So this is a change in market sentiment here. This is the first time that that's happened in quite a while. It's really the first time since we broke out of this consolidated range that we had a move like this. So This is a change in market sentiment, and right now just looking to identify what we're going to do with this loss. I did go long at the 42. I am getting a break below the 50 in the RSI. Price is not yet to 38, which is where I would look to manage a losing trade. As long as price continues to stay above 38, I can look for a better exit to just abandon the trade, hopefully back up at the 42 or very close to it. Or I can just stay in the trade and look to go long still. I like the idea that we're bouncing off the bottom of that Bollinger's on the 1 minute. I'm not really interested in abandoning this trade yet, but I'm not liking what is setting up. You know, it's one half of one way and half a dozen another. Don't have a lot of choices in the matter. I'm already in and I'm already down, but it's not down enough to make me want to abandon the trade. We can't just jump out of every trade that takes a little bit of risk. The paper cuts would just eat us up and we wouldn't have an account left. Right? So we've got to be willing to take some heat in the trade. These are not trades that run on high momentum strategies. It's almost 10 o'clock at night in the marketplace, so we're in a low volume environment. We've got to just play the charts, and these are not high scalp potential opportunities. Right? We're just trading the trade, moving from line to line and working with the candles and maybe a little bit of information on some indicators. But we can't just bail out of the trade anytime we take a little bit of heat. We got to let price discovery work itself out. And so we just got to wait to see where this is going to go. Alright, so not much has changed since I had the video paused. We are still riding the center of the Keltner bands, and on the 1 minute charts that I watch, we are just starting to get a rise off the bottom of the Bollinger, which is forming a bit of a squeeze pattern. So we might be participating in a nice move to the upside. We definitely have the energy for it. If we look here at the fractal energy, the RSI oftentimes will take a bounce off of the 50, and so hopefully we'll get a bit of a move like that to put everything together and get us up here into the 46 so we can get risk out of the trade and test that 46 again. Persistence beats resistance, and so the more that we come up and test that high, the more likelihood we have of breaking through that high. So we are back now above the 42. Don't have a candle close yet, but right, we keep things in perspective. Recognize that price discovery is starting to work in our direction. Tape is picking up a little bit of speed, or it had started to pick up a little bit of speed. Alright, so as you can see, we are down to the 38. We are taking heat against the 42 where I got in, so I'm going to look to manage this trade if I do not get a turnaround. That is looking promising, but on the grand scheme of things, this move down to 38 threatened my position. I need to see a change in market sentiment, or I'm going to need to get out of this trade. If it can offer me out a little closer to where I got in, that would be a good thing. So I'm not instantly just reaching up to flatten my position, but I'm not looking to take this 4-point loss if I don't have to. So you can see we're at 39. I could get out now at a 3-point loss. I think I can do a little better than that. So I'm going to let price move around a little bit, see if it will offer me out a little better. Perhaps I can get out at 40. Right, so if I adjust the quantity to 3 and offer to sell at 40, perhaps I can get out at that. Um, I'd be a little more happy with -2 than a -4. I might have missed my opportunity though. Yep. So when price first comes down and takes that bounce, oftentimes that can offer you the chance to get out without too much pain if you take it on the bounce and bail. Problem is that there are times that price will bounce and then come right back up and go in the direction you wanted it to go. So I'm not always just quick to abandon my position just when I see the bounce. Kind of like to hang out and, give it an opportunity to move back in my direction. I'm going to leave that on there. I don't think that this is going to turn out in my direction, so I'm hoping to get out at the 40 and just manage my loss. And if I get out at the 40 and it goes back up, well, that's all right. We need to protect ourselves from a bigger loss. That's the bigger picture. The RSI lick year is below 50, or not the lick year, just the RSI is below 50, and the fractal energy is peaked and is starting to turn over. Really don't want to be in this trade if it explodes to the downside. So really you're going to have to make a decision here to exit the trade as a loser. We are up to 38.25. Starting to get a little bit of a move to the upside, and the bonds are starting to sell off a little. This could perhaps come back up and let us out. If I bring this over and show you what I'm looking at, we had this leg down, stayed inside the Bollinger on the 1 minute, and we're moving up towards the midline. Now, price often stalls at that midline, so still not looking to think that this is a long trade, just looking to get out with less pain. So we're at 38.5, well, 38.5. We've got 3 in the quantity. We can offer that at the 39. So hopefully this will let us out without too much pain. I keep turning it on and turning it off because we are moving away from our risk out, and things are starting to line up like this could become profitable. Don't know if I really want to jump out. If it wants to suddenly go my way, I'd like to be in it. Right? And this is like all trades and all strategies. We don't have definitive answers for everything. Right? We should have gotten out right here at 38, but the things were starting to line up in my direction, and I'm not really interested in bailing. And now we're getting that move that we're looking for, but there's still a danger. This could absolutely just drop on us, and we could end up eating a lot of loss. We could put in a disaster stop. So suppose we put in something down at the 36 to protect us from a massive drop. I wouldn't like to take that kind of pain. It's a 6-point move. but that is something that you can do to protect yourself from a massive downturn, and especially if you're trading something like the ES, you do get those big sudden spikes from one direction to another. So, maybe if you're trading the ES, that might be something you'd be interested in doing. From where I'm sitting with the NQ, we do get those moves. You can see right here in this candle, it does happen. We do get them, but I'm not a big fan of putting in hard stops, even for a disaster stop. So I'd rather not do that. So you can see that we're still down. I went long from the 42, and from the time that I went long, we've gone quite a bit in the other direction. Still looking to get out of this trade, but it's not seeming to be moving in our direction at all. This was a nice move where we could have perhaps flattened up here or anywhere in that area, take a 1 or a 2-point loss. I'm gonna put my finger on the trigger, so to speak, and just be ready to flatten this if we get that spike again. On the 1 minute, we are ranging back and forth in the lower half of the Bollinger Band. Just not really seeing any kind of solid price discovery here. I'm definitely not interested in eating, $150 of loss, but we're going to look to just get out of this trade if we don't see a very strong move in our direction. We can always get out and then offer back in at the 42 to go long, and that would be more appropriate than just staying in this trade that can spike against us at any moment. It's just the kind of situation that we're in. Still just sitting and watching. We've had a pretty decent move in the bonds. We've had a higher high, higher low for the last few minutes. It's been stair-stepping higher. Those moves in the bonds puts pressure on our market. We're sitting through the center of the Bollinger Band here on the 1 minute. That's a close above the band, which is a good sign. We didn't get rejected off of the band like we did there and like we did here. So we did get the close above the band. That is promising to hopefully not only get us back up to the 42, but perhaps we'll be in it for the ride when this fractal energy takes a move and the RSI breaks to the upside. If you noticed when I had brought that chart over and you've seen the bonds, it's continued these higher highs in the last few minutes. We've had these price steps up. So that does put pressure on our trade. And right now, well, we're just still waiting for price discovery to resolve itself. And what we can do perhaps is look to maybe add another chart, put the NQ on the 1 minute over here with the Bollinger. That way you guys can see what I see and what I've been watching for on that other chart. And it might help you understand why I'm still in the trade, although I'm out. So I didn't like this spike down, and if I happen to be wrong, that's fine. I'll just be wrong. we're going to offer in at 42 to go. We probably want to go long at the 42, right? So that's what everything is lining up to be. We need some price discovery though. At this point, I took quite a bit of loss in that trade. Don't like it. Definitely want to get into a good trade, a trade that's moving in our direction. Getting these really big spikes. Need a candle close here for a determination of what we want to do in this trade. Alright, so the video has come over an hour now. I'm going to go ahead and shut the video down. I think I've demonstrated quite a few times now about getting in, risk in, and risk out of the trade. I appreciate you watching this video, and I look forward to seeing you at the next one.